with Bernanke clearly front and centre. Is he going to calm the markets? Is he going to appease the markets? What are the equity markets going to look like at the end of the week?
One thing's for sure, he's going to be choosing his words carefully. We've seen from the lack of words from him over the last few weeks that's been a reason for people to take profits. There's a nervousness that's definitely crept into the market. Now, set against that, and hopefully something he'll be reiterating when we hear from him on Wednesday, will be the fact that all along the Fed have said that, number one, any withdrawal from QE is something that they will do on a gradual basis, because it is going to be difficult to do. And number two, they're not going to do it until such time as the US economy is strong enough to stand on its own 2 feet. That's been rather swept under the carpet in terms of this is probably the biggest financial experiment we've ever seen. How are they going to withdraw it? Are they going to let it time out? Or is it going to be more pronounced?
What are your expectations? I know it's a big question, but what are your expectations and how's that going to play into this bigger context now?
Notwithstanding what's happened over the last few weeks, the Dow Jones and of course the FTSE 100 still significantly up in the year to the date, largely driven by corporate earnings. Just casting our minds back, of course, the big quality companies took the knife to their cost lines in 2008, 2009. A lot of their sales are now dropping through to the bottom line. A lot of them are beginning to build up cash piles. As such, they're in pretty good shape. So the only potential foe we've got come the Q2 reporting season is heightened expectations, and those have been battened down slightly as well. So one would hope, if anything, it's going to prove a positive catalyst as opposed to the negative sentiment we're currently seeing.
And is it enough? Okay, so assume Q2 is generally better. Is it going to be enough, the strength we get from that, to carry the market in light of some of the other disappointments, some of the other worries on the macroeconomic side?
Two factors in play here. Number one, even at the previous elevated levels, valuations weren't looking stretched on either side of the pond. Obviously, since then, we've had something of a retrenchment. So providing the earnings part of the PE ratio does its bit, makes its contribution, we should be okay. Secondly, we're well aware of a wall of cash of what have been fairly nervous institutional investors who've missed out on a lot of the rally of the last 18 months looking for an entry point. So that wall of cash, should it come to the equity market, and equities still remain the investment destination of choice, could obviously see the FTSE and indeed the Dow really push on throughout the rest of the year.